In today's video, I'm going to be showing you the exact trading strategy I use, which could have made you over $500 in profits today from one single contract. Let's get right into it. So here we are on the weekly chart looking for our initial weekly bias. We see that we have now taken out that buy side liquidity. We have traded through that high, had that strong weekly kind of close above, and created this weekly fair value gap within that created range. On the weekly chart, what we're looking for is whether we're trading towards a high, trading towards a low, or trading towards an imbalance. So we're looking for the external, that internal range liquidity. We're looking for what order flow is being disrespected and which order flow is being created. So in this situation right here, where we've just ran these all-time highs at this buy-side liquidity, and now we have this fair value gap for our internal range liquidity as well, the question becomes, are we trading towards a high, trading towards a low, or trading towards an imbalance? At this particular time, we are not sure which one of those we are trading towards, and for that reason, we are neutral. We are probably more expecting price to return into this range as so, because we have taken out those all-time high buy-side liquidity. But again, we are neutral on the weekly as we are unsure what price wants to do now that it's taken out that buy-side liquidity. We're going to need to look towards the lower time frames to get some type of further insights. Here on the daily chart, one step in closer from the weekly. Again, on the weekly, we are neutral. We do see the daily has driven through this high, expanded very rapidly through that buy side liquidity. Within that weekly fair value gap that we see right here, we also have lots of these daily imbalances, and we have our fib right here, our premium and discount ranges. Our expectation on the weekly, now that we have ran that buy side liquidity, we are expecting a potential high to be formed for it to then return into this range and balance some of these imbalances. Obviously, price has been rallying very aggressively to the upside. We don't want to just be taking shorts. That's why we are tentatively bullish, but we are being aware that now we should be expecting a high to form for us to pull back within this created range and balance some of these imbalances now that that weekly buy side liquidity has been ran. So we're just framing this framework from the higher time frames, the weekly down to the daily, and subsequently the 4 and the hourly that you'll see in terms of what we should be expecting price to do. Here's a closer look at the 4-hour. We see above this buy side liquidity that we have ran, we created this 4-hour, this failed swing low, this failed swing high within this range. We are short-term consolidating, and then we get this SMT right here with this buy side liquidity run right here on this 4-hour chart. So this is potentially just giving us further confluence that we could potentially be looking for lower prices. Again, we had that higher time frame buy side liquidity, that weekly fair value gap forms, those daily fair value gaps form within that weekly, and then now we're seeing that 4-hour SMT right here is starting to stack those confluences that we could be potentially looking for lower prices down into that created range. Here we are on the hourly chart right now. So we're starting to get the picture that we could be looking for potential lower prices. We're going to be looking at how the hourly is reacting now to this buy side liquidity. We see weekly price opens up right here. We come up, we run this buy side liquidity that was at 4-hour high right here previously for that bearish SMT. We look down here, we see that we have this consolidation, expansion, consolidation, expansion. This could be that smart money reversal right here to potentially form this market maker sell model where we are now approaching that sell side of the curve. All in all, basically what we're looking at is that we're looking at further confluences that we could potentially be seeing price looking for the downside. Again, we have that higher time frame liquidity sweep, those imbalances below within that created range, that 4-hour SMT. We see this potential market maker sell model on the 1-hour as well. Now we're going to be looking at the 15-minute and looking at how we are going to be framing that morning and that daily candle profile in terms of what we are expecting for price now that we're kind of leaning towards the bearish side for price today. So now we're zoomed into the 15-minute. We're going to be looking at the framework for the daily profile, how we're going to be framing that morning session in terms of what we're expecting for price for the day. Over here, you'll see Weekly, we're neutral. Daily, we're bullish, but looking for that potential high. That 4 hour, we have that bearish order flow forming from that bearish SMT. And then that hour as well, we get that same liquidity sweep into that bearish SMT from that previous high, both on that 4 hour and that 1 hour right here, which transfers to this 15-minute right here on this chart. So again, we're just kind of been framing the idea that we could potentially be going lower prices. We've expanded high into that premium buy side liquidity, and now we've just been looking at the order flow around important higher time frame key level, because guys, that's really all trading is. It's just identifying higher time frame key levels in which you expect price to react, and then looking at the order flow in terms of what's being validated, what's being created, and what's being invalidated and not being respected. So here we are on the 15-minute. Again, we framed the concept that we're looking lower. This is right here at 9:15 before market opens. What do we see? We get more bearish confluences. We see this consolidation, this expansion higher, this liquidity sweep for potential manipulation, and then we could be looking at expansion lower for this power of 3 model. So again, we're looking at the higher time frame confluences and just breaking it down, and here's another layer of that where we could see a potential power of 3 model forming, in which we have Asia consolidating, London running higher for that liquidity sweep, and then New York reversing, expanding lower through the range. What do we see right here? Liquidity sweep at, I believe this was 8:15 prior to 9:30 open. We come down, change the state of delivery by closing below this bullish set of candles. We get this break of structure and these bearish fair value gaps. So we just continue to stack the bearish confluences that we could be seeing lower prices. Now that we see this setup forming, we're going to be looking for these 15-minute imbalances right here for a reaction to see price potentially taken lower to the downside. So all in all, we have confirmed that we are looking for lower prices based on our analysis top down, and we're just going to be looking for a potential bearish setup, which we have identified that could potentially occur in these 15-minute bearish fair value gaps. Now that we've already seen that change in state of delivery lower with that break of structure, and we are going to now look at the lower time frames and see how price plays out from here, now that we know what we should be framing and what kind of setup where we should be looking. All right, guys, now we are here on the 5-minute. We're going to go through the price action. We're going to play it live. We're going to enter and exit as if we were actually taking this trade. Again, we're looking for lower prices. We're going to be looking for a price to react within these 15-minute fair value gaps right here at 9:30 open. We're going to be playing it through and seeing how price reacts. 9:30 opens right here. We get this huge candle up here. We're not going to be entering right on this candle. We want to let price settle a little bit after that 9:30 open. So even if this runs all the way lower down here, we miss this trade, that's totally fine. We just want to let some of that volatility settle and see if we can still get a trade entry afterwards, being that this setup is kind of occurring right at market open. Now that we get this huge wick right here, we're going to want to be looking at how price is respecting this consequent encroachment of this wick right here. We see right here that we are getting that 50% respected. This could be a entry from these candles. We'll go ahead and just take a sell right here for demonstration purposes. I will show you my executions later. You will see that this is one of the entries that I took. We're going to put our stop loss up here. Profit target goes below right here. Right now we have about a 1 risk to a 1.5 reward. We are still eyeing this 15-minute fair value gap up here. If it does come up here, sweep this 5-minute, this would be an excellent entry to minimize your risk, get your dollar cost average a little higher, and increase your reward multiple. So we're going to go through, we're going to continue playing this trade out right here. Boom, price comes up here into that higher 15-minute. We're going to take an additional sell. That brings our risk to reward to about 1 to 2. Our stop loss is going to be protected right here above this fair value gap, right here above this breaker block, and above the order block right here. We're going to be targeting these relative equal lows underneath that London low now. Price comes down. It now breaks this set of up close candles with a strong close lower. We're getting a lot of confidence now that price is running lower, that we are on the right side of the trade. We can now bring our stop loss down below lower here. This is a internal liquidity sweep within this 15-minute range. Price should not go back above that. If it does, we're probably going to be taking out this high. Just another way to minimize your risk, guys. We're still going to be looking for lower prices. We see that we have this 5-minute gap right here. Price comes up, taps that 5-minute fair value gap right here in this set of up close candles. Up close candles are what? When we are down, when we are going lower, those are going to be bearish order blocks. You see how we respect right within that mid range of that bearish order block, hit that fair value gap, expand down lower aggressively. That's exactly what you want to see, guys. Price does become a little lethargic in my executions. I do take off one of my contracts right here as we do come back up into this range. And that was because NQ was acting a little squirrely down towards this low. I didn't want a bullish SMT to form and up and running up towards these highs. So I did take off one contract as it did come back up here in that 5-minute fair value gap. And I left the last one on for these lows. We're just going to, for simplicity purposes, to keep the chart clean, we'll just let it play out as such, as if we're not taking any partials. And you will see that price does come right down here and take out our profit target for our daily goal. This would have netted you over $1,400. Again, I did take a partial up here, so my average was not at this 6,290. It was more up towards this 6,293. I will go ahead and put these executions up on the screen for you. These are those executions from that trading setup. You can see July 7th right here, 2025. This screenshot was taken at 10:55 a.m. This is on the ES September 2025 contract on the 5-minute chart. You can see that I took two right here as we were right within that consequent encroachment of that wick. And then again at this higher 15-minute fair value gap, as we swept that buy side liquidity, we run lower, support in this 5-minute, run lower, again supporting that 5-minute, and then you can see down towards these lows of NQ. I did take off some of my contracts, and my final one gets hit below this London low. All right, guys, so there it was. That was my trade from today. That was on the ES Futures September 2025 contract. You saw we took some shorts from these 15-minute bearish fair value gaps, and we ran it below that London low. Thanks for watching, guys. If you enjoyed the content, make sure you're liking, commenting, and subscribing. If you guys have any questions about my method of trading, or if you guys just enjoy the content in general, make sure you guys are asking and putting those comments down below.